So if you've got computers handy, marketplace bulletins. If you've been here a while, you know what a marketplace bulletin is. It's very, everybody who's been here know how to get to them. You know how to get to them? Okay.
I'll help
So
you.
for new agents, you know how when you go into agent services, maybe you haven't done this yet, I can show you. You go into agent services, you log in, you got the map of the United States, you click on Missouri, it gives you a list of products that we have available. For every product, there's a marketplace bulletin, okay? If you click on it, it's almost always at the very bottom of the list of things that are available, and it tells you a lot of really good information, the details about what we're offering. So I'm gonna go over the Group Term 65 is a good example, and then I'll hit on some highlights on the others. So here at the top, it's gonna show you, first of all, once again, your issue ages. Group Term 65 is available 0 to 65. We know our maximums. I don't have my minimums memorized as well, but that's important also. There are some of our policies that you can't offer to a newborn, right? Or any of that, so you wanna know those. Then it's gonna give you a product overview. Also, it's gonna give you a plan code up here. At first, that's not as important, but when you go to re-enrollments, your plan codes are important because that's what it's listed on your management report. That's how you know what your person you're sitting with has bought with us. Okay, so your plan codes are there, and your issue ages at the top. Product overview, so group term paid up at age 65. It's a group term life insurance with guaranteed level premiums and level benefit amounts. Premiums never increase, face amount never decreases. Rates are unisex, doesn't matter if you're male or female. You're done paying on it at age 65. Coverage becomes effective at the time of application for amount issued by the company. If the customer leaves the job, premiums may be paid through bank draft even after leaving their job. Premiums and the coverage remain the same. So this makes me think of something curious. It's a little off our training, but I just went through this with billing the other day. I had to work out the coverage. So we think of, when we sit with you guys, talk to business owners, you say, hey, so you guys are covered at the moment that you sign, and then after enrollment, we start deductions, and those when you pay that, do you think that it pays for the previous month that they were already covered, or do you think it pays for the month going forward?
It's the previous month that we were already covered.
It's not. It is not the previous month, right, Derek? Because we talked about this in the way it worked out. I had to convert somebody who was payroll deducted. They went to bank draft. I had to move them back to payroll deduction. That first month, which we won't ever tell them, is basically at no cost. It's called the, it's not called the introductory. It's called.
I mean, they're not paying for it, but they're still having deductions come out that month.
They have deductions come out, but it's to pay for the upcoming month.
Right.
So deductions in April are to cover their coverage for May.
Okay.
And that's important to know when you do switch them back and forth from payroll deduction to bank draft. Because
That makes sense, because we do the deductions before the bill comes.
Right.
And I think we got confused because of that first month, they are covered. So we're like, well, how did they get covered and they haven't paid for it? There's a name for that period of time up to when the first bill's covered. And they are covered.
It also makes sense where we calculate AP, that's what we do by 11, so 12.
Yeah.
Months.
I had the hardest time getting that straight in my brain because of my knowledge I had before. I thought, that can't be. I couldn't figure it out. I thought that would share that. So, I digressed a little bit, but it's important. It's important. With this policy, you can sign your spouse up. If you're in Illinois,
You have to have coverage first.
Yeah, you have to have the coverage first, and you can't sign them up for more than what you have.
Correct.
And even then, you can only sign them up for 50,000. Okay? Same with the children. You can only sign them up to more than 50,000. All right? If an employee wants to sign up their child and they're over 21, they have to sign their own application. All right? Unless they're a full-time student, right? Anybody under 25, they're a full-time student, then the parent can do that. The policy terminates at age 100. And also, you have the option to sell an accidental death benefit rider with the policy. I do that a lot. You guys do that a lot because it's very attractive. Looks really good on there. It's a way to really beef up that coverage for just a few bucks. Something to know about that is it does fall off at age 65. The coverage does, not the premium. Premium stays on. Okay, so that's important to know.
I'm confused about that.
We talked about it a little bit, but
Okay.
it's because
Like,
you think about insurance is a transfer of risk, right? So in that time period, we've accepted the risk for a very small amount. That's because it's as a rider. So
Yeah, their actual life insurance that they have though will stay in force to 100.
I guess I don't understand what a rider is. Maybe
It-
that's my problem.
It's not a standalone policy, so it has to be attached to something else. So they can't get just the accidental death benefit by itself.
Got it.
They have to have it attached to their life insurance.
Okay.
Yeah, so if they want to like beef it up a little bit, you can add the rider to it. It's only like a few cents more or a dollar or two more.
Okay.
They can increase their coverage. But
Got
it's
it.
not like its own standalone policy, so it doesn't last forever either.
And you said that's the one that falls off at 65? The rider falls
Just the
off?
rider.
Correct.
Got it.
Just the
Okay,
rider.
that makes sense. Thank you.
Yeah.
I was thinking like an individual person, not like a rider is another policy.
yeah.
That's, yeah.
yeah, gotcha. We also have a optional premium waiver. So, that can be issued up to age 55 with this one. Let me read the verbiage on this. So your group term life insurance coverage continues if you become totally disabled and can no longer pay the premiums. If the primary insured is disabled after the policy anniversary following the insured's 5th birthday, premiums are waived for as long as the insured remains disabled. This premium waiver also expires at age 65. The optional premium waiver rider may be added for a spouse and children too. However, premium waiver only covers the insured named in the policy. For example, if an employee becomes disabled, the premium for his policy would be waived. The premiums for his spouse and children would not be waived. So only the person that's disabled on that. Alright, so that's mostly that. And then eligibility, of course, this is only available through the work site. Can't get it on an individual market. We already covered. This can be written on applicant's spouse, natural born, legally adopted children under the age of 19, child who's dependent, full-time student under age 25, and you're not required to cover all your dependents. So, we've already covered the coverage amounts by the cheat sheet, so we don't really do that again. I'm gonna do that one. So that's most of that, okay?
See it really quick?
Yep, Derek's got something.
Yeah, so you guys will see here, Jazz and Laura, why don't you take a look here? So the maximum coverage that we can write on our group life insurance is $150,000. But just know the first time we meet with the employee, the maximum that we can do is $100,000. When we come back the following year, then we can add that additional 50. We cannot write 150 right off the bat.
I have
That's
another
what we can do is 100.
question that goes with that. So it says here like 0 to 44, it's like, or sorry, 0 to 40 is up to 150, which you said the first time you couldn't do. What was my question?
Did you answer your question?
Is that only for if they want it paid up at 65, or is that total?
Same for the group life to 100. It's
Okay,
not paid
so
up.
it's the same.
Same
Okay.
payouts. Yep.
Do you have the cheat sheet that's got that on there, because some of them have.
She does. She has
Yeah,
it.
I do.
With the 50,000?
Mhm.
Yeah, too? Okay.
I just can't read.
Well, it's teeny tiny.
The good thing is that whenever you're in your e-app, it literally will not let you go up. There is no
That's
option.
nice.
So when you're like, when you have a conversation with somebody, the likelihood of you writing that much, like this is the first time in 2 years that I wrote that much this week. Like nobody wants that much because it's super expensive, because it's a lot. I mean, it's permanent coverage, so which is good, but
We don't necessarily encourage you guys to write that much right
No.
anyways, because if that
Get hit.
falls off that business within a year, that's a pretty big chargeback.
yeah, it is.
Good.
So, but the good thing is it won't even let you. So it's not like you can like, oops, I made a mistake. Like you can't do it. So.
And then there's another page to this, that covers underwriting. So substandard group term policies will not be issued to unhealthy applicants. So that kind of brings up like how we decide who can get what life insurance. We have a medical history guide that I know I keep it in my enrollment book. It's like I said, it's a guide, not exact. People will say things that are not in here. You just gotta use your judgment on some of it, but it does help you with a lot of them. So for instance, blood pressure, rated, it's gonna be rated. ALX if not under control for 12 months is what it says. But blood pressure, if it's controlled, we can do group terms policies, okay? Same with the diabetes, if it's controlled, we can do the group term. I don't know if there's any other ones besides those two that we control with medication that you don't have to write. Is that the only two health conditions that we know of? For group
High
term?
blood pressure, high cholesterol, diabetes,
Yeah, those are the only big ones.
big ones, most common. Which
Okay.
we're
Yeah.
gonna get into, I would
Yeah.
say.
So, anything other than that, you can check on here. If it says that it's gonna be rated, but it doesn't say ALX, the next thing you would pivot to would be career life. All right, and then I'm gonna have Derek, cause that's what you guys do, you pivot to career life next, right?
Mm-hmm.
So, there's a reason we don't always pivot to career life, and Derek's gonna explain why we don't always.
Well, I don't ever anymore. I stopped altogether. If they're an adult and they don't qualify the group term, they immediately go ALX with me.
That's how we've done it the last year
Yeah.
because they've been really weird about it lately.
Because the Career Life Plus, it's strange because you could write them a policy on the Career Life Plus, say it's 15,000, but said that they find something in their medical history, they will issue that policy without getting them to sign off on it, and it will reduce their coverage substantially. Yeah. I mean, it'll be 1,500 or 15,000. They'll reduce down to 1,500, and it'll be enforced, and they will collect those premiums. And the entire time, the client thinks that they have 15 grand in coverage. So to avoid that, I stopped offering the Career Life Plus altogether to adults. I still do it on kids because it's a phenomenal plan for children. But for adults, they don't qualify for the group term. I just go straight to ALX. Don't even worry about it. I bet go ahead.
So with that, if they are a few pounds over the max for group term, but they're well within the limit for career life, how would you handle that? Would
If
you,
it's just the weight, then
like 5 pounds, do you decrease the rate so they can get group term? Or do you write them career life?
if it's within 5 pounds, I'll write them the group term. I mean, you can fluctuate 5 pounds.
Dude, that's a poop.
Yeah.
I'm sorry, but it is. It is.
Yeah, if it's like 5 pounds, yeah, get them on the group term.
Okay.
Now, if it's like 30 pounds,
Yeah,
something like that, then maybe, I don't know. 'Cause I've had them rated on the Career Life just for the weight too.
Okay.
So I would do
Just-
LX,
Yeah,
it's quite a
they're
bit.
usually about a 20, it looks like about a 20.
Just so you guys know, you guys can go off their driver's license too. You know, if their weight is lower on their driver's license, you guys can go off of that because it's a government document. I've done it before myself. But yeah, you have to know what it is. And then you have to make sure that you tell them, because if they're gonna get qualified, a QAC call, a qualified insurance call, you wanna make sure that they use the weight on their driver's license, okay?
Do you ever give them the choice, like, so, because of your height weight ratio here, this is what you qualify for, now, do you know that this could be rated down? The way I can give you a guaranteed rate is you could go this, and this is a little bit different plan, do you ever do that?
A lot of times I don't, but if they are older, if they're over the age of 50 and I know they're gonna get that call, then I do make them aware of it, that hey, there is a chance they could get rated to this plan, and we'll review this ALX policy with them, so they know, okay, we're gonna get you qualified on this, but there's a chance that when the qualified insurance calls, when they pull your medical history, it could get moved to this one. Good news is that we're gonna keep you insured. So get moved to this plan.
Well, because that way I'm your advocate. I wanna get the best thing I can for you, and this is what I'm gonna try to do.
Mm-hmm.
Know that I may not be able to get that done,
Mhm.
so.
And on Mana's team, you guys may do it differently, but I got like 5 or 6 of those rated Career Life Pluses, and then that was enough for me to say, I'm done offering it. Because you
Yeah.
can kill your franchise or your client. I mean, that happens to the wrong person, like the business owner. He thinks he has 50,000 coverage, and he finds out he only has 5.
And he's been
Yeah.
paying on it for a year?
How the hell do you explain that?
Yeah.
So I just stopped altogether because I didn't want to run the risk. So it's either group term or either it's ALX on our team.
Alright, so then a little bit about, career life. That is a whole life policy. So for the new people, what's the difference between a group term and our whole life policy?
Whole life. You mean for like regular insurance? Since-
Yeah, this is the same.
So whole life you pay on your whole life and it builds cash value and you can like borrow against that. But for our group term, it doesn't build a cash value, which is why we're able to keep it at a lower cost. And yeah, that's that.
Yeah. And.
And free tax.
And be paid up early.
And that.
And
Right, I mean, because those are the differences. Remember, they're mostly familiar with the whole life policy.
Right.
So those are the special things, the whole fees, that, yeah. So, what I'll say a lot of times when I talk about offering the career life to kids is, hey, so I do have a whole life policy that we usually use for kids. You know, if I look at my rate sheet and show you the price difference is so small and they have such a long time to build that cash value, you might as well go the whole life policy, you know? And then I just explain it how it is as a whole life, you know, so.
I know that there is some agents that do the group term on kids. I still do the Career Life Plus personally because it just gives them more options. The rate isn't that much difference because they're so young. And the Career Life, you know, they can do a lot more with the cash value. And it does have a chance to be paid up too once the cash value builds up. So.
I think it depends, like on our team, it depends on how old they are, how old the kid is, because it does start to get up there whenever you're 15 to whatever, 20 or whatever you're doing for the kids. And then it also depends on if we're in Missouri or Illinois. So like sometimes if you're in Illinois and they don't have group term, they don't want to cover themselves, like you're obviously going to go to Career Life. But if you're in Missouri and you're trying to keep everything low, you know, you have a lower income franchise, so you're going to go for group term.
So did
So-
you guys catch that? So if you're in Illinois, if you're sitting with somebody in Illinois and they either don't have one of our policies. A lot of times people have policies otherwise. They want to get something on their kids or their spouse. We can't do it at all with group term, but we can do it with career life. Yeah.
And of course, depending on the age, like you can just pivot to that, like it's close enough in the in your premiums, but
Yep.
yeah,
And I've
Megan.
also had sorry, Megan.
No, go ahead, finish your thought.
No, I've also had a client who had a 17-year-old and he says, no, I want him to have life insurance. I don't want him to have something he's gonna cash out.
Mm-hmm.
So I'm
Yeah.
doing this group term. Yeah. I had that happen in Illinois.
It does depend. Yeah, it does depend.
Sorry, just a thought. So
Yeah.
say you're sitting in Illinois with an employee. They don't want anything on themselves, but they want it on their spouse. Since they don't have it on them, you go straight to ALX or do you go to
I mean,
you stop at Career Life?
You always want to ask the health questions. The girl has no health questions, right? The Career Life Plus.
Okay.
She's perfectly healthy. The only time I'm telling you not to write the Career Life Plus is if they have health conditions.
Okay.
Don't risk it. You will get rated.
Yeah, because we only offer career life plus in Missouri if they don't qualify for career life.
Yeah, they're perfectly healthy. You can do the Career Life.
Okay, just clarification, thanks.
So on the career life plus, it's, on this one, you can't go over 50,000 on that.
Mm-hmm.
That's issue amounts up to, from 1,000 to 50,000. This career life plus comes with an OPI. So an OPI stands for option to purchase additional insurance. And that comes to them, what, we see it, what, at
Two,
2
4,
years,
6,
and then again, right?
and 4.
2 and 4. So what that means is, after they have the policy for 2 years, they can purchase more insurance without a consideration of their health. They're still gonna pay more if they're older, but if they've had a health condition happen in those 2 years, that's not gonna change. That's not gonna be a consideration. We don't have to worry about that.
Yeah, it's called a proof of insurability. They don't have to prove it.
Yep, so that's with our Career Life Plus, that we don't have that with our group term.
Well, is the eligibility the same on the CareerLife Plus as it is for the group term? Is it just 1 or 0 to 25? If they're in school,
It says, 0 to 20.
the same them at school?
For issue age, 0 to 70.
I thought
For
on
children,
kids.
dependents.
Okay, I'm sorry. Yeah.
It doesn't say anything about school here. Let's see if it says it on the backside. Doesn't say anything about school that I can see. Oh, here, okay.
I'm trying to think here. What is it, Di? Can you insure a 25-year-old on CareerLife Plus if they're not, well, if they are in school? Does it say on the back of there, yeah, brochure here.
Oh my God.
At the top.
Says coverage can be written on an employee's natural born or legally adopted children or grandchildren ages 0 through 20. Parents must be advised if a grandparent is the applicant, and the employee is not required to cover all dependents. So,
Sounds like it's 20.
Yeah.
So that is the difference between group term and the CareerLife Plus.
but I think that's just saying, like, I bet this is the same as if it was a group term policy, where if it's over the age limit, they have to sign for it. I bet that's what it is. Like, if
Unless
they
they're in
wanted it,
school, group term, you don't have to.
right? But if they are over that age, then you can have them sign. I bet that's probably what this is too.
So that thing with.
I don't write to me 25-year-old kids.
I don't either.
Yeah,
It's
most
too
parents are
expensive.
like-
Right.
Yeah. It does say though, so, I did run into this, parents must be advised if a grandparent is the applicant, or I had a lady who wanted to, it was a close family friend, and she wanted to, like, they
Gift
had a
it.
baby, and
Like,
she
gift
wanted
it.
to give a gift, and she was wanting to surprise the mom with it, and she can't, you know? You have to get a lot of information, not only that, they have to sign for that, so. And there's no, there's no.
Yeah, there's no insurable interest.
Yes, yep.
Because she wasn't a family member, she was just a friend.
Right.
She was a good friend, lifelong friend, but, yeah.
Couldn't you still pay for it though? Could you put in her bank information?
Yeah, she could pay for it. She just can't be the owner of it.
Yeah.
And like the applicant, so they'd have to do it.
Yeah, so I mean, it can be done.
Yeah, she would just have to tell the lady.
Right.
Yeah.
That was the whole
Right.
thing.
Okay.
Yes.
Okay.
Yeah, she wanted to get it and surprise her with it.
Oh, I
Yeah.
see. So yeah, there's no.
Oh, what a sweet friend.
She never called me back after I told her.
Of
I
course.
can't surprise her, then I don't wanna do it.
That's
Yeah.
funny.
Yeah. On this one, it comes with an accidental death benefit. When you're doing the application, it doesn't tell you what that amount would be. This tells you. It doubles the face amount of if the insured dies from an accidental bodily injury.
Yeah, if you do that rider, it'll reduce the face amount down, but it just doubles it if it's an accident. That's all that does.
All right, so that's it on that one. And then modified life. So everybody should be familiar with modified life.
Mm-hmm.
Because you will have one of your people come back with that at some point. So it is a whole life policy also. We kind of refer to it as our risk plan. So it's higher premiums, but it does offer coverage for people a lot of times who can't get coverage anywhere else. And I think that's a good selling point to business owners as well. So I will mention this. I'm like, hey, you probably have some people who have some health conditions.
Mm-hmm.
Know that like if they can't get insurance anywhere else, a lot of times we can cover them.
Mm-hmm.
Correct me if I'm wrong, that's one of Amanda's favorite plans, ain't it?
It is.
Yeah, and I sold several myself. These people that are high risk, they know it. You're not surprising them by telling them that they are. What's music to their ears is that we're not saying no. We can still insure them. So it's a great policy to definitely enroll in.
One thing that I've ran into a few times now, and I think it's becoming more prevalent, when people are talking about their kiddos, autism has to be ALX. You can't do group term or real life for
Yeah.
autism.
Yep. And it's on there. It's on
Yeah.
that. If you can't do that's on there for that ALX.
I've ran into that 3 or 4 times now.
Now, Lauren, Jasmine, if you guys ever, don't know what something is, or like, oh, that's a good question, I don't know that, this packet here should have the information.
I'm a little disappointed that on the blood pressure, it doesn't say that they can go standing.
Oh, yeah.
It doesn't say it on there, that, your first choice, if they have a high blood pressure, is, hey, is that controlled? Oh, if it's controlled. Yeah, so if you look that up in here, you wouldn't know that. So that's one of those you just gotta memorize.
Has to be controlled and still under 140 or 100.
Right, so on the modified life, whole life plan, it's paid up in 20 years, okay? The risk part of it is that in those first 3 years, if they were to pass away as a result of a health cause, so not an accident, right? It would only pay all the premiums they've paid in, plus 10% interest to their beneficiary. If in those first 3 years they died as a result of an accident, it would pay the face value. After the 3rd year, it will always pay the face value, okay? It builds cash value, because it's a whole life plan. And,
This is still
That's guaranteed, right?
yep, it's a guaranteed rate that's just, locked in, it's never gonna change. Your coverage, your base amount's never gonna be decreased. There's only, and knowing that that's, we can cover a lot of things. There are some things we cannot cover, and this is where they'll have them on this sheet, and it's at the bottom down here on what we can't cover. This is straight out of our, this medical history guide, and what we cannot cover is in your e-app. So it's at the top, one of the tabs, and if you ever don't have it with you, you can just drop that down and look at
Yeah,
it.
there's only 7 things that will make them uninsurable. If they don't qualify for anything, you wanna read what those are?
So if they have a terminal illness, they can't. If they have Lou Gehrig's disease, amyotrophic lateral sclerosis, ALS, right? HIV, AIDS, or positive tests to antibodies for the AIDS virus, Alzheimer's or senile dementia, confinement to a hospital or a nursing facility, use of illegal drugs within a 2-year period, or confinement to jail. Those are
So
the things we can't issue policies.
you gave me this last year, I think, and then I added those up here
Oh,
to the
that's a
auto
good thing.
decline.
Yeah,
And then I also put a list of the ALX on there. Like this should automatically shift you to ALX. Just at the top, since you had
Okay.
some empty space, so
yeah.
we could send that out for people to have.
Mhm.
That's what I use in my enrollment.
I like that.
Just
Yeah,
'cause-
send that out, and then I can print it again, and I can put it.
Because one more time, we all learn the hard way, or at least Diana does. I'm like in the middle of, I don't know if Megan, you remember. I'm sure Derek remembers because everybody's texting me like, I'm pretty sure you got to do ALX. Like I was in the middle of online enrolling with the whole agency watching me, and I missed you got to go to ALX. And I was like, Screech. We figured it out. And we figured it out, and I got her back on track, but I was like, son of a biscuit. Like, of course I would do that in the middle of the whole agency watching me. That's cool. That's cool. Whatevs. So now it's on my sheet. We all learn the hard way. You what?
You were testing them.
I know. I was just making sure you guys are all paying attention, watching me enroll this lady. So,
So
Yep.
that's most everything we have. Do you have some other stuff you wanted to add on that, Derek?
I don't think so. For the group term, I know you went over the accidental death rider, did you go over the premium waivers?
I have a question though.
Yeah.
Do you, for our team, we don't really do anything with mortgage protection or income replacement. Do you guys do anything with that?
So we don't unless they have like literally nothing to pitch to them. Then like if they're like, oh yeah, I have a cancer plan. Oh yeah, I have a critical illness plan. I have accident plan. Then I would pivot and say, do you have enough life insurance to do funeral and final expense? Well, we already did that, but then your income replacement mortgage. And then in Missouri, I'm pretty sure it's Missouri, has the accidental death benefit that you can write just by itself. It's a policy standalone.
We have a sheet now for it.
Yeah, it's called the ACB. So that's what I would use to do like a lump sum accidental death benefit would be what I would do for income and mortgage. So
You would
You
do
want
it.
to do the 10-year term?
I've never written that.
Here, bye. If you guys ever see our rate on our 10-year term, it's not very good. I mean, if they price shop anywhere else, they have a good chance of beating it. So don't even offer it. And besides, our group life 100 blows out of the water at the end of the week. So we don't even offer a 10-year term.
What I've done is I've done the ACB, the standalone, because it's like $3 or something ridiculously cheap. I'll pitch the accident protector max, even if they already have an Aflac short-term, long-term disability, because it has the accidental death benefit in there, which can benefit them even if they have an accident. Especially in Illinois, it's like $1 or something ridiculous. And then if they already have that, then I may even convince them to do like a group term, small amount, but with a big, huge accidental death benefit that's rider. I mean, that's very super rare, but I've done it before.
Yeah.
Most of the time they need something else, so which is better for them and for me to do something else, like cancer endurance or.
So have you ever gone to an enrollment where I had it recently, where somebody has a 10-year term, renewable, convertible,
With us?
with us, and they asked, like, I had somebody that they're like, okay, I'm 5 years into it,
I want to convert.
well, what do I do? Yeah, well,
Yeah.
they didn't know, so what do I do? And I'll
Yeah.
convert it to the whole life, or do you?
Well, let me see. I don't think I've ever done it on the worksite side. I've done the annual renewable term where they don't even write that anymore.
Yeah.
But they had annual renewable term. It's terrible
Pretty much
policy.
every year.
And we transitioned her to whole life. That was a tough one, but we wrote her, but I don't think I've ever done it on the worksite side.
So Tony gave, because I asked him, because this guy wanted to do something, he was 5 years in, he said, what should I do? And,
Was he not eligible to group term?
he was eligible. I
Okay.
guess he had just put the rider on, I don't know, it was before me.
Gotcha.
So,
Right.
re-enrollment, I think maybe even before Tony, I don't even know, it's been a while. But, so really that's what we did, is I wrote him a group term, it was a little bit more, and, that's considered a replacement. But, for Tony, I told him, I said, you're gonna just stop paying on that. And it's going to, they'll send you a letter, and it'll just lapse and fall off. So that,
Because if you do it where you
Without
check
letter.
yes, you're replacing it, then you have to go through a whole bunch of
and
jumps.
we're supposed to replace our own stuff.
Correct.
Yeah.
Because you're screwing another agent, apparently.
Couldn't be much with a 10-year.
It was like that with the annual renewable term. I was like, get out of here. You're not making any money off of that. That's a stupid policy. So
Yeah. I can't think
Move
of
on.
anything else any other things that you've run into enrolling?
No, I
Maybe
think
it might be one-offs, but a good info to know.
I think it's just the way that you present it. I think that's definitely how Amanda approaches ALX. Like when it comes back and you get a COD to do the ALX modified life, she's like, it's all about the way you present it. Like you go in, like Derek was saying, it's the positive thing. Hey, we're still going to cover you. There's something in your medical history that maybe you didn't disclose, or that they thought was more important. That we can still cover you. That's the good news. And then here's how it's going to work. It is going to pay the full amount if you're in an accidental. If it's only the first 3 years,